Welcome back to Fast Market here on the Schwab Network. It's time for a cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Celsius Holdings. I mean, I remember the data, 6 months, a year ago, data was really good on Celsius, but I'm just reading some of the background on this company. Pepsi's like pulling maybe inventory because sales have been slowing. Do you guys have the data that backs up this 42% drop that we've seen so far in 2024?
Yeah, unfortunately we do. And, Celsius, ticker symbol CELH, that's been one of the best names for what we do. Historically, we rode this to over 300% gain over the last couple of years, exited in February because of exactly what we're seeing now, and that is weakening in the brand versus competitors, which I think is the big story. The energy drink sector is fine. The macroeconomic tailwinds still exist. They're just helping companies other than Celsius at this point. And Celsius was nothing but up and to the right for a 2 or 3 year period in terms of consumer demand, in terms of consumer happiness. They were the new kid on the block. They were the new shiny object that everybody loved. You can see it on here in just overall search demand, web traffic, in the blue, Celsius up and to the right until earlier this year and just started to fall off, whereas competitors stayed stable. And I think that's the big story here is simply that the growth that Wall Street had priced in for Celsius simply was not sustainable nor attainable. And so when we look at year over year web visits, again, Celsius coming in near the bottom of the pack. This is kind of one of those industries where people just like to switch it up every once in a while. And sometimes you're the beneficiary of that, and sometimes you're the victim of that. And right now, Celsius is the victim of that. Now, on a brighter note, we are seeing some stabilization in the data in terms of especially consumer demand levels, and the stock has started to stabilize a little bit here. We think Wall Street's probably got things priced about right, and that the outlook from here is much more favorable than it's been early, for the bulk of 2024. So we like what we're seeing from Celsius. We think that they're in the right spot. We think that the stock has come down to the right level, and they could be the next beneficiary of that fickle consumer swap that seems to always occur in the energy drink business.
Yeah, Andy, they seem to be, their growth prospects, they claim to do pretty well. They've got a unique market position that seems to be doing pretty well as the healthy energy drink or more healthy energy drink.
Yep.
My question to you is, since their growth has stopped growing, it started to decelerate, is there a better product? Is that what's happening, or is this just a cycle that's been, it's better price now and it's a better entry point? Which is it?
Yeah, I think it's both. I think that Monster has done a phenomenal job of combating, they were a little late, understanding what Celsius was doing, but they've done a phenomenal job of expanding their product lines to compete with what Celsius was doing. And I think other competitors have done the same. And just quite frankly, I mean, when a sector gets hot, especially the drink sector, it's really not that difficult for large companies like Coca-Cola or Pepsi to roll out new brands and products with similar features to the latest, greatest hot competitor. And I think that's what's happened to Celsius. So they're kind of a victim of their own success in that regard. We've seen that over and over again in the drink business, soft drinks, alcoholic drinks, energy drinks. It happens a lot because the barriers to entry are really small, especially when you're one of these large companies that already has the distribution space in every grocery store and convenience store across the country.
Andy, when and you throw in on top of it, and I think this is when it really started to slide a little bit, maybe because like your data showed that people were using and going to other brands, back to Monster, Ghost is another one.
Yep.
But then PepsiCo also cuts their inventory levels or what they need because they see that also, and they have that big partnership as far as distribution goes with PepsiCo. Is that also what's hurting this stock? And, and that's why we've seen the big, massive slide.
Yeah, for sure. And I think Pepsi it's more of a reaction to the declining consumer demand. They might have been a little bit slow to recognize what was going on as well. So that's more reactive, I think. I don't read too much into that in terms of the outlook for the future of Celsius, because I think once Celsius starts performing again, they'll get that distribution space back. That's the way this industry goes, and they've made a name for themselves as being able to scale up quickly and to deliver. And so, overall, I think as we head into this, the remainder of the year and, earnings that are, I think the stock has based out pretty well here. I think that Wall Street has pretty much digested all of the negativity and the slowdown in growth. And so now it's up to Celsius to come through with a surprise. And if they do, then there's definitely upside potential in this stock, both short term and long term.
All right, great discussion, great stuff. Yeah, 30 seems to be the base case for this stock over the last couple of weeks. Great stuff, Andy. Have a great day.
Thank you. You too.
All right, that's Andy Swan, co-founder at Likefolio, breaking down Celsius. I mean, if you just look at it a 6 month, I mean,
it's brutal.
Yeah, I mean,
6 months down 59%. I have it in 6 months.
Yeah, it's been a slide. Seems like it's got a base in here, Kev. Implied volatility levels elevated going into this report. How do you want to look at it from an example?